According to the Financial Times on January 12th, Malaysian Economy Minister Rafizi Ramli stated that China is well prepared to counter Trump-era tariffs. Chinese chip makers and technology companies are heading to Malaysia in droves, and investments from China are expected to grow significantly. Rafizi believes that these moves by Chinese companies could bring Malaysia billions of dollars in investment over the coming years, revealing the dominance of U.S. companies in the Malaysian market. Trump is set to take office as U.S. president again on January 20th. Following his election in November, he threatened to impose a 60% tariff on goods imported from China. This has unsettled investors and prompted business to reorganize their supply chains. Over the past decade, Malaysia has been the beneficiary of the China Plus One strategy. Positioning itself as a critical link in the global supply chain, Malaysia has actively catered to high-tech industries like artificial intelligence. Penang, a Malaysian state, has become a hub for chip manufacturing, while Johor, southernmost state of Malaysia, has emerged as a burgeoning base for data centers. Previously, U.S. companies dominated these industries in Malaysia. However, Rafizi believes a wave of Chinese investment will flow into Malaysia as the government implements industry-supportive plans. The Biden administration's restrictions on U.S. companies selling advanced chips to China pose a potential threat to U.S. investments in Malaysia, creating an opening for Chinese competitors. In 2024, Rafizi visited 5 Chinese cities, Hangzhou, Suzhou, Shanghai, Beijing, and Dalian, where he remarked on China's entrepreneurial mindset and contagious dynamism. He emphasized the importance of collaborating with China to drive innovation in Southeast Asia. During a 10-day visit in June last year, Rafizi met with over 100 AI, technology, and biopharmaceutical companies to assess their willingness to invest in Malaysia. He hopes Chinese investors will establish data centers in Malaysia. Rafizi noted that Chinese investments usually come with their own ecosystem. Once they attract the initial 2 or 3 investors, they will see more Chinese investments following suit. He acknowledged that, whether they like it or not, the geopolitical situation will persist for some time. Global companies must determine their de-risking strategies, and so far, the natural approach has been to find neutral, open trade nations. However, smaller nations cannot match the economic value offered by major economies like China or the U.S. This, Rafizi argued, underscores the necessity of establishing the Johor-Singapore Economic Zone. As Malaysia climbs the value chain, it will generate more revenue. Rafizi added that some tariff measures targeting Chinese companies could yield unexpected outcomes, helping countries like Malaysia attract more genuine and long-term investments.